In this webinar, in this short 40 minutes webinar, we're going to break down one of the most powerful yet confusing concepts in trading, and that's multi-time frame analysis. Okay, by the end of this session, you know exactly how to use multi-time frame analysis to find precise and high probability trades without ever needing to second guess yourself. Okay, because how many times in the market have you guys used multi-time frame analysis where the more time frame you use, the more conflicting signal you're getting, right? You have paralysis analysis, right? You're on 1 hour time frame. It says that you're supposed to look for a buy, and then you check the 4 hour time frame. It says it's supposed to sell, but then you check the daily time frame. It says you're supposed to buy, right? There's so many conflicting signals, and then from all those conflicting signals, you may have paralysis by analysis. From that, you may end up jumping in way too early, or late entries, and then by the end of it, you're just overcomplicating things. Has that ever happened to any of you guys before when you're using multi-time frame analysis? We do get that all the time, especially even when I've been trading for this long time. Sometimes when I'm caught off guard, that happens to me very, very frequently. So this webinar, I really want to make sure that everyone understands what time frame is actually used for, and how do we actually apply time frame correctly. So for me, time frame really only has two main usages. Okay, if you guys can guess what that is, just let me know. But the first usage for time frame is gonna be about risk management. So this is gonna be very, very tricky for me, but the first thing I use time frame for is risk management. Okay, I'm not gonna spell the whole thing out. The second thing I use time frame for is for precision entry. So precise entry. And that's pretty much it. Notice I'm not talking about strategy here. Okay? When it comes to time frame, I'm just using it to trade safer, get in quicker, and get in at a precise spot. Now, in order for these two things to actually work, okay, I need to have a strategy in place. Now, in this case, when I talk about strategy, I mean a setup, whatever you want to call it. It could be a chart pattern. It could be a, what's popular these days, ICT strategy, ORB strategy, all that kind of stuff on the internet, right? But you need a setup first. Once you have a setup, then okay, we use multiple time frame to help out with our risk management and to help out with our entry. So time frame alone is actually useless if you're not using it for a specific reason. In this case, for a specific setup. Okay, so before going into the actual usage of the time frame and all that kind of good stuff, I want to first talk about the setup. Okay, because without talking about the setup, it's gonna be very, very weird. So let me bring you back to Aussie Cat here on the daily time frame. Okay, at Urban Forex, our main thing is focusing on a demand in the market, having either supply or demand in the market, showing that there is bigger players in the market that's pushing the market in one direction, and all we're trying to do is getting on pullbacks to ride the trend. We are trend continuation trader. Okay, so if I again just use the whiteboard one more time, our speciality, right? If you guys are familiar with this channel, our speciality, that's a tough word to say, is to look for a move up. And that's indicating demand in the market, because we move out and away from a consolidation. And the next thing that we are trying to do is look for this move to continue to go up to this area here. Our job is very, very simple, is to catch this move to this move. Now, this whole setup, right? This whole setup has a lot of things involved. We first need to have a breach like that, indicating strong demand in the market. We then need to identify the pullback. We then need to look for our entry, and then we need to manage our exit, trying to get out around areas like this. Okay, but this right here is the bread and butter of my trading, being taught by Naveen at urbanforex.com, right? This is what I'm specialized in, and the problem with just looking at this alone is entries. How am I gonna get in here, right? If I know this is gonna pull back and buy, am I supposed to get in here and then hit the buys right here with, and where's my stop loss? Should my stop loss be here? My exit is right there. So is this a 1 hour trade? Okay. What about situations where what about this other thing to consider? Let's say if we are in a move up like that, a downtrend like this, right? In the grand scheme of things, this alone looks good, but when we consider everything on the left, then it looks like we are on a move towards the downside. What do we do now? If I zoom out a little bit bigger, let's say we are looking like there is a move from the far left. It's going up from before. It looks like this. So then, is this fine then? So what am I trading? This whole thing. Let's say if I change up the color like this, okay, and let's say if I ask you to focus on this yellow color part right there, right? If I extract the yellow part out, wouldn't it just look like this? And this specific part that we were just speaking about, this buy right here, okay, wouldn't that buy be somewhere in this region here? Is that buy okay then? Right? Notice that when we take time frame into account, we can, it's almost like a Russian doll, right? We open one time frame higher, and we see, we're part of something else. We dive a little bit deeper, then we see, hold on, there's another trade, one time frame lower. So which time frame am I supposed to trust? Which time frame am I supposed to trade? Which time frame am I supposed to ignore? I'm sure those are the type of questions that you guys have. Correct? Let me know if I'm wrong. I want to bring your attention back to Aussie Cat right here. Okay, this is just an example that I have, and it really helps paint a picture of how do you want to use time frame correctly. So if we look at Aussie Cat right here, okay, on the 60-minute time frame, there is going to be a few types of traders looking at this. One type of trader is going to look at this and say, all right, well, recently we are in a move towards the upside. We have a breach towards the upside. This is showing strong demand in the market, and we cleared a big chunk of SNR right around here, right? If we do get a pullback, that's an area we want to look for a buy, right? Simple as that. However, if I just go out a little bit like this, there is this second type of trader who has their screen slightly more zoomed out like that, and they would see this move from the higher area moving all the way down, and then we have a move coming back up, and they would see that, hold on, I'm not too sure here, because we're coming into a big area here where the sells could start happening. Based on this amount of data and this time frame here, we should be looking for a sell. We're not supposed to look for a buy, right? And then there's this other trader who's looking at this on the 240 time frame, and they're looking at this as, okay, we have a move going up like that, a long extended uptrend, and it recently started to reverse, right? This looks like a sign of reversal, right? If you guys have been watching the video put out on this channel, this could be a release area to push price towards the downside, right? And then on the daily time frame, you will have a different picture. This picture is telling you we are in a range, we broke out, we had a pullback, it looks like it's going to go for a buy. Now, the question I'm going to ask all of you guys right here, okay, is which time frame shows the clearest picture? We're not even talking about strategy here. We're not talking about setup. We're not talking about pullback. We're not talking about any detailed stuff. I just want to ask you guys, which time frame shows the clearest picture of where we are going to be traveling to. Is it the 60, the 240, or the daily? Based on this chart alone. In this case, that's going to be the daily time frame, and you guys answered that correctly, the higher time frame, right? In this case, it's actually the daily time frame. And it's not because it's a high time frame. That's not the reason. The reason is I'm looking for a clear demand in the market, and I'm looking for a clear pullback. That's it, right? So if I'm looking at Aussie CAD here, I see a very, very strong push towards the downside, and we have been struggling here for a very long time. This is a huge ass range here that we've broken out of. Very, very strong momentum, and it's pulling back, and it looks like it wants to continue the move towards the upside. It looks like an uptrend, and if you really see when the uptrend started from earlier this year. Okay, so it's not because of any other reason besides that. My goal here, right? My goal here is to look for, if I can find my drawing tool. My goal here is to look for this setup. A breach and a pullback. Now this breach and a pullback can come from many different places. It could come from an overall uptrend. Of course, if it's in an overall uptrend, it's much cleaner, right? We have the backing of the bigger player, right? But if it's from a big congestion and then it broke out of it, that's also a very, very good signal, right? Not to mention the move, the way that went up was strong, the pullback is coming back into SNR. All of that looks very good. So when I see something like that, this becomes the time frame I'm anchoring myself to, right? This is my time frame where I'm going to be calling my analysis time frame. Okay, now generally once you have that, then we have two more things to figure out, right? If this is a time frame we're going to be basing our analysis of, we will do two things. We're going to check the higher time frame, in this case the weekly time frame, okay, to understand if, again, remember the two things I used the time frame for. Number one is going to be risk management. Number two is going to be for entry. Now actually let's have a look at the lower time frame first, because I want to show you guys, if we're using multiple time frame, the whole purpose of using multiple time frame is actually, especially when it comes to going down to the lower time frame, is to look for an entry. Okay, now in this case, if your analysis is telling you, we have broken out of this area that encompasses of this high and this high, if we are pulling back into that area, the only reason why you would go down to the lower time frame is when your analysis time frame has pulled back into that area and you're trying to fine tune that entry. All right. Because if you're not using the lower time frame, on this time frame alone, your trade idea would just look like this. Stop loss below this SNR and then trying to take it up to the recent high. Okay, that's basically a trend pullback trade, right? You don't need to overcomplicate things. That itself is a strategy. You can find this in a lot of different books. A trend pullback trade, basically, right? If you guys have a look at all my trading books right there, here, here, there is a lot of books that really covers trend pullback trades. That's just like that, as simple as that, right? And you guys are going to be surprised that this type of trading, what I'm actually showing you right now, makes a lot of money if you guys are, if you are patient and if you have the right mindset to trade them. So then, what's the whole point of going down to the lower time frame, right? The whole point of going down to the lower time frame is we're not here to sit around to invest in the market waiting for it to make 1 hour after multiple days, right? The whole point of going down to the lower time frame is because we're traders. We want to get in and out quick, right? That's the whole idea, right? So bringing us back to this point, the whole reason why we will go down to a lower time frame is to finesse the entry. That's it. Instead of having our stop loss here, making just 1 hour if the trade reaches target, We want to try to get into areas like this where, instead of 1R, we could potentially make 5R, 4R, 3R, right? Getting in and out quick, tighter stop loss, right? That's the whole point of going down to the lower time frame. Now, having that said, a lot of traders go down to the lower time frame way too quick, right? I often see times where traders would do this. You see a strong SNR, right? Price is all the way up here. Let's say we are from an uptrend. Price is dropping down like a tank. They will go down 5-6 time frame right there just to see when the lower time frame is turning around, and they will just get in right there and then when the lower time frame is showing a big hammer. You want to still make sure that when you're going down to the lower time frame, it still makes sense, right? That's where the analysis time frame is very, very important. You want to make sure that on the analysis time frame, things are slowing down first before going down to the lower time frame. Because if you go down too early, you're just going to be shooting yourself in the foot, getting in way too early, right? So let's have a look at this. Let's actually go down to the lower time frame and let's see what's going on here. We'll go down to the 240 and I want to show you how things are slowing down. Okay, now I'm on the 240 now, right? 240 time frame is showing me slightly more details, correct? We see multiple legs towards the downside, and we see at this zone that we drew out earlier, things are looking like this. If I can take out my pen tool, things are looking like it's doing a full-blown reversal towards the upside, almost like a V formation, a reversal strategy that I've been talking about multiple times on this channel, right? All of this happening at the higher time frame zone. And not to forget, right, when we're on this lower time frame, we see that the pullback is coming in multiple legs, and the way that it's coming down is all subdivided, very slow, very choppy. That's what I'm looking for on the lower time frame. Now remember where we were talking about our entry on the higher time frame. On this time frame, right, your entry do not need to be high. Your entry could be right there, right? So if we really focus on understanding the actual momentum, which is like this, move down, move down, move down. Not too weak, not too strong, but we finally see strong buyers reaction. Another move from the sellers, and this is the first time we made a higher low after this move towards the upside. We hang around here. As we hang around here, you could get in as price goes up. Now, this area here, if you were to get in, it will look something like this. Stop loss below, entry at the recent high, exit at the recent high like this. All of a sudden, instead of a 1R that we were looking at earlier, it becomes a 2.5R, right? The problem with going down multiple time frame is some traders will look at something like this and they would go, if I could do that, then why wouldn't I go down one more time frame to the 60-minute time frame and look for an even tighter stop loss that will look something like this? If I could do that on the 1 hour, why shouldn't I go to the 15-minute time frame and it will look something like this? Why wouldn't I go to the 5-minute and it will look something like this? And all of a sudden I have a 22-hour trade, pending for me that's gonna make me millions and millions and millions on this one trade alone. Is that something that has ever crossed you guys' mind before? I'm so sure it has, because it has certainly crossed my mind before. Just let me know in the chat. I'm curious to know now. Now, the reason why you don't want to do that is because there is always gonna be an overkill when it comes to let me just speak to you guys here. The reason why you don't want to keep going down lower and lower and lower is because, yes, there will be a one time out of 100 time where you're able to catch a 22-hour trade. But just know that when you're trying to aim for something like that, it's super, super difficult. What it actually means on the chart is what you're actually trying to do on the chart is something like this. you're trying to catch this move, okay, which belongs to the daily time frame. Remember, which belongs to this time frame, but you're trying to catch it on, let's say, the 5 minute. And if I just draw this like this, okay, we're trying to get in here, right? You're trying to get in at in a microscopic level. Can you guys still see the chart? Yeah, you're trying to get in at a microscopic level, where one small little tweak on the higher time frame, one small little tweak like that on the higher time frame, that's gonna kill your stop loss. You know, your 1 hour out, 2 hour out, 3 hour out. You don't want to be in a situation where you keep getting stop losses again until, you know, that one trade that actually performs, that makes 4, 5, 6 R is just there to protect or to recover all of the losses that you have incurred in the market. So trust me when I say this. When we use multi-time frame analysis, you want to make sure that you only go down one time frame lower for your precision entry. That's all. Any time frame lower that you go more than that, that's just going to cause more problems. Okay? You don't want to give yourself too much difficulty when it comes to trading. Trading alone is already hard enough. You know, using more time frame is not going to benefit you. Trust me, right? Okay, so now that you guys sort of understand, again, let me know if that makes sense. And, you know, if you guys agree, and if you guys would promise me that you won't go down more than more than one time frame. Okay, unless there's a clear reason behind it. Okay. I see a question here from Woko. Why 240 time frame? Now, the reason why 240 time frame is the time frame that we're using for our entry is because the daily time frame is where we see the clear breach and the clear pullback. Everyone remember the whole idea of, you know, which time frame is telling me the clearest picture? In this case, the daily time frame, because it has, you know, a clear breach and a clear pullback, and we are in a strong, you know, trending market towards the upside, at least from this area. Otherwise, we have broken out of this huge range because of that clear picture, right? And the fact that, you know, we're just merely pulling back now in a couple of candles like that. That makes me think that on the daily time frame, this is where my analysis time frame is. At Urban Forex, we sort of call this our anchor time frame. Once I know that, then, you know, I'll go down to the 240. That's where I'm reading the pullback, I'm reading the precision, I'm reading how things are coming down. Okay, if I'm able to read each swing, each small swings like that, I'm able to read and see the separation between the move down, that's the time frame you want to stick to for your entry. Okay, again, I want to repeat this one more time. When it comes to trend pullback trading, and when it comes to pullback specifically like this, as soon as you're able to see the separation in the swings, and you're able to see, you know, the move coming down, up, down, up, down, up, you're able to read the momentum. As soon as you're able to see that, that's the time frame you want to stop, wait, look for your entry. Do not go any lower than this time frame. If you go any lower than this time frame, you will find situations like this. I'm on a 60-minute time frame now. You will find situations where, it looks like a move going down. Okay, here it looks like it's gonna turn around. Let's get in on the buy. Boom, stop loss. Don't want to be in that kind of situation. Okay, again, you may think that the buy could be happening here, but without knowing that this breach happened on the daily time frame, and you're supposed to wait for price to pull back all the way into this zone here, the higher time frame zone, before looking for a buy. Okay, and that's why it's so important to make sure you identify the right anchor time frame first before going down to the lower time frame. Otherwise, there's going to be a lot of problems. Okay, hopefully that answers your question. All right, I want to show you guys another example that we have right here on the Euro USD chart. right? So remember the whole idea. What we specialize in, we basically specialize in this: a breach towards the upside, clear breach, a pullback, and we look for a buy. Okay, it's actually as simple as that. You do not need to overcomplicate things. So let's have a look at this pullback area right here. Okay, once you have seen this, right? Again, it doesn't matter. Here I'm using the 1 hour time frame. Earlier we were looking at the daily time frame, correct? Now notice that this breach here and this breach on Aussie Cat on the daily time frame, if I remove time frame, remove whatever is showing up here, right? It both looks very, very clean, right? Even on Euro USD, this breach towards the upside. If I tell you to not look at this and I tell you that this is the daily time frame, you would think that it's a very clean breach and a very clear move towards the upside, correct? So it doesn't really matter what time frame we're looking at. I'm trying to draw your attention to the fact that I'm trying to look for a strong breach in the market. I'm looking for a pullback, and I'm just purely looking for one time frame lower to get in. That's it, right? That answers a lot of the questions that you guys have regarding, what time frame should I use, the 240, the 60, the 15, the 5. Let's put that aside first. Let's focus on the setup itself first, and then you can use that setup, apply it to any time frame you want. Okay, fire emoji if that makes sense, and if that's gonna help you, right? Of course, that's gonna help you because I've seen traders done this multiple times. But fire emoji anyway. So Euro USD, this again is a clear sign that we are moving towards the upside and we're looking for a pullback. So again, what's the whole point of using time frame? Looking for precision entry. Okay, we know this is the spot, this is the breach area where things could pull back to. So let's go down one time frame lower, in this case the 15-minute. And again, if you're on a time frame where you're able to see things slowing down and you're able to see separation in the move down, that's the time frame you want to look for your entry. So one more time, if I'm able to draw a line like this, move towards the downside, okay, touch the zone, pull back, try to sell again. First time ever we have a higher low, not making any more lower low, and then first time ever we're making a higher high. Once that has happened, we look for a pullback, and then we just simply hit the buys from there with our entry like this. Okay, now again, if I were to draw that entry out, it will look something like this once price pulls back, and exit right around there. And this trade will look something like this. We pull back into our entry, touch the zone, and then we reach target. This is the use of multi-time frame analysis, using lower time frame for precision execution. If we're on the 60-minute, right, and if our whole goal of trading is just going up, it's just doing pullback buys, this trade would look something like this. We will get in around here, stop loss at the low, and then you could target the recent high, right? But this right here is a 0.8 hour trade. Now again, I want to make sure you guys really internalize this logic. Really internalize the logic here. The only reason why we're going down to the lower time frame is to look for the precision entry, to look for the turning point. That's it. You don't want to overkill it by going down way too many time frames. Okay, there's a lot of questions here regarding different types of breaches, different types of higher time frame setups. I don't want you guys to focus on that for now. Focus on what I'm trying to tell you. Okay, then I'm gonna add more pieces to it. Right? So far, this should make sense, which is to why are we using a lower time frame instead of just using one time frame? Okay, all right. So let me go back to the charts right here. Okay, so this would be an easy trade with a 1.8 hour profit. I want to move this forward and show you guys the next trade that follows this. Okay, we have another pullback right around here, and we have this area of breach right there. Okay, we have a breach and pullback performing multiple times. We have it performing once towards the upside here. We have another pullback performing second time towards the upside. We have another pullback coming in. Now, this time, this trade looks something like this. And if we go down to our 15-minute again, just to look at the detail of the swings here, we can again see a pip. Sorry, I got too excited there. We can see a pip perfect reaction here, right, to the zone here. Again, last push towards the downside, making a full-blown reversal, and this is the first time we make a higher low. Now, if that's the case, again, we could do the exact same thing, right, that we did here, which is entry here, exact same thing as what we did right there. We could replicate this, do it again right around here, exit at the recent high. Okay, now let's play this forward, and this trade ended up in a stop loss, and it failed dramatically. Remember the two things again that I talked about earlier, where number one, we used multiple time frames to look for precision entry. What's the other thing? Can you guys remember what's the other thing? Okay, risk management. Okay, good. Risk management, right? So on Euro USD, this is the analysis time frame, right? We see this breach towards the upside, we had a pullback and we were looking for a buy. If we just go to the lower time frame, this trade would be a stop out trade. You want to use the higher time frame to understand the bigger context, the bigger direction, and to understand if there is barrier in the market that's gonna cause problem. So what happened here is, if I go to the 240 time frame, you will be able to see what we are actually doing here. We are buying at the top of the range, right there. After price reached that area, it came down, and we are here being all gung-ho, trying to look for a buy, right there. And that's the perfect area for people to be trapped, for sellers to come in. Okay, and this right there is the whole idea of multiple time frame analysis. Essentially, there's 3 time frame you want to use in trading. Okay, let me reiterate this one more time. You have your middle time frame, okay, your higher time frame, and then your entry time frame, right? This is where the setup appears. This is where you're checking the higher time frame risk. So in this case, we are, there is risk involved here. Obviously, we are trading at the top of the range, trying to look for a buy, right? This higher time frame is to see if there's things in the way, or if we're following the direction of the bigger player, right? So this higher time frame is, for us to check the risk to see if things are clear to go further or to go lower, right? And then the lower time frame in this case is for our entry. The part where most trader, really fuck up is this time frame here, the setup. If you are able to understand very quickly how your setup is supposed to look like, then this doesn't become a problem, and this doesn't become a problem. Because how easy was it to look for an entry? How easy was it to look for the higher time frame location? Those things are super easy. What's difficult here is to look for this thing right here, the setup. Okay, and again, to show you guys how a proper pullback setup would generally look like. So if we look at the, again, Euro USD higher time frame here, we need a clear breach and a pullback. Again, if I remove the time frame here, it really doesn't really matter. It's just a pattern that you want to look for. A consolidation and a breach up, or a trend pullback, lower low, higher high, higher low sequence, right? So that part needs to be clear. This right here, ladies and gentlemen, needs to be very, very clear to everyone. You don't need to look at too much data. You don't need to look at too little data. It just needs to look like this, right? As soon as you are able to see swings and separation on the pullback, that's the time frame you're staying on to look for your entry, to look for things to turn around, and then you'll go up one time frame higher. In this case, if we go to the 240 and we're looking for a buy right here, remember? That's a call you want to make, right? If you want to buy this, are we close to the range high yet? Like the second trade we were looking at. If you're thinking we're not close to the high yet, we can still buy this, there's still room to buy this, then by all means, go ahead and look for the buy, right? But we know that on the second pullback right here, if we do go for the buy, that buy is going to fail dramatically, right? Does that make sense, everyone? Okay, so you enter in the lower, I'm reading a question right here from Manuel. Just 1 second. So you enter in the lower time frame, but could you also enter in the middle time frame? Yes, that's the whole point I'm trying to make here. You can enter on the middle time frame. However, where would you put your stop loss, right? That's the whole thing here. Like we were talking about here, if the goal here is to look for, sorry, let me just bring up the charts. If the goal here is to look for, a higher high and higher low sequence, and you're expecting price to go higher, if you want to get in on a buy here, if you don't go down to the lower time frame, then exactly where would your trade be invalidated? It would only be invalidated if the higher high and higher low sequence fail to make higher highs and higher lows. In this case, if it breaks down, right? So it will only be invalidated if price breaks down, correct? So your stop loss would need to be below here, and your exit would be at the recent high, at the for the most part, for the safest part, all right? However, if you get in on the middle time frame, then the risk reward may not be that good. You're not really getting, you don't really know that's the precise turning point, so on and so forth, right? So you would go down one time frame lower just to look for the turnaround. And let's go back to dollar Swiss. Okay, now on dollar Swiss, I want to start off on this 60-minute time frame. Okay, now I want you guys to play pretend with me for a second here. Actually, I want you guys to play pretend with me for a second. Okay, so I'm not gonna do any playback here. This is a downtrend, right? It's clear as day that it's a downtrend, right? And then we sort of held here a little bit, and then we have a pullback coming in into this area, and then we started to see a sharp move towards the downside. Now, to test everyone here to understand if you guys really paid attention, is this supposed to be the analysis time frame, or does this look like the entry time frame, based on the fact that we can actually see little swings in the market and we can really see the momentum? Which time frame is this? Let me know in the comment section right now. Black Hill, good. This is the entry time frame. This is not your analysis time frame. Good. Okay. If that's the case, then let's say that, okay, let's do this. Let's say we are right here. Okay, someone saying analysis, watch the recording again. Okay, so this is the entry time frame because we can see all the detail of the separation between the swings here. Now, if that's the entry time frame and you're looking at this right here, right now, what you want to do, if you're looking at this, you want to first figure out which time frame, on dollar Swiss, which time frame is the analysis time frame. Okay, because again, your foundation doesn't start from the time frame. Remember what I was saying earlier. Time frame is useless if you're not properly using a setup. The foundation of your trading needs to be, the priority needs to be the setup first, and then using the time frame correctly. Okay, the setup first, using the time frame correctly. So which time frame is showing you the actual setup? In our case, which time frame is showing us a clear breach and a clear pullback. So if I go to the 240, I see a clear breach towards the downside, right? This looks fairly simple. A clear breach towards the downside, I see, two legs coming in. Okay, now this looks good, right? This looks absolutely perfect. I can look for a sell. Or should I not look for a sell? What do you guys think now? Because most of you guys would also be looking at what's happening on the left, which is all of this shit that's happening here. We're not really in a clear downtrend. Can we really trade this? That's the type of question you're asking. So, because what we were talking about earlier was, we're trying to look for something where it's just going up, right? A clear uptrend, a huge range that broke towards the upside. It's a pullback buy, simple as that. Or we look for a trending market with a pullback, and we're looking for a buy, simple as that, right? In this case, yes, this piece here looks good, but what about this shit that's happening over here, right? Is it a clear trending market? Now we're confused, right? Because now we do not know what's going on here. And yes, Blako, you are right on point. Now the question is going to be, go up one more time frame just for our risk management, knowing exactly the type of shit that's happening on the higher time frame. What's actually going on. So I will go to the daily time frame in this case and just see what's actually going on here. Now in this case, it's again telling us a different story. I want to make sure that this is the trade that we were first looking at on the lower time frame, right? When we're going up to the daily, just to check the risk, right? Our so-called risk management, we see a different story here. Because again, now on the daily time frame, we are able to see a move towards the upside now, again, in perhaps small pieces in terms of the swings. All of a sudden, if we ignore everything we were looking at on the 60 and the 240, all of a sudden, the daily time frame looks like it's an analysis time frame for something else. Do you guys follow so far? That all of a sudden, the daily time frame looks like an analysis time frame all of a sudden. Because, we are able to see perhaps small little pieces of the swing towards the upside. Does that make sense? You guys follow? Yes. Okay. Yes, I got a few yeses, right? If I zoom out a little bit further, we can also see there is this huge low all the way on the left here. And we are pulling back on the daily time frame, right? And, the daily time frame is looking like it could sell, right? So this right here is a scenario in the market where there is agreement, alignment from the higher time frame telling us there is potential sell here on the daily time frame. There is potential sell here on the 240 time frame. There's potential sell here on the 50-minute time frame. There's potential sell everywhere. Holy shit, we're gonna make fuck tons of money. Okay, maybe not fuck tons of money, but again, just for the sake of it, let's look at the weekly time frame just to see, overall, are we clear? Okay, if the daily time frame is, let's say, our analysis time frame, if you look at the weekly time frame, yes, looks clear, right? Overall downtrend breached this support low, and we are looking for a sell. Okay, so everything looks good for a sell, and we know that this main sell here comes from the daily time frame, right? The question that you guys would probably have after this webinar is, yes, I understand everything you've been everything you've been talking about here, Lucas, but I prefer to just trade on the lower time frame. For example, the 60-minute, 15-minute, or maybe the 15-minute, 5-minute, or whatever the case is, right? Some of you guys don't prefer to look at the higher time frame because that you don't have time for that, right? You have to wait and hold on for ages and ages and ages for a trade to perform, and we don't all have the time for that, correct? So for any of you guys who are wondering about that, let's say, right, if you only want to be trading on the 60-minute, 5-minute, 60-minute being your analysis time frame, 15 minute being your entry time frame, this is a situation where it would help you. Okay. I'm gonna go over 10 minutes here a bit, guys, so bear with me. Hopefully you guys are okay with that, with a little bit more detail. Hopefully you guys are good with that. But yeah, I'm gonna go over 10 minutes anyway, just to show you guys what you guys can do in situations like this. Okay, so we know on the daily time frame things are looking like it's gonna go down. Okay, so let's forget about everything that we were looking at before. Let's just say we are right here. Okay, let's just say we are right here on the daily time frame, and things it's looking like it's going to turn. This is the analysis time frame, right? Your goal is to look for an area where this trade on dollar Swiss on the daily time frame stops making higher highs and makes its first lower high and then start selling. So that may look something like this. Okay, that may look something like this. Again, this is your analysis time frame, and it will look something like this. You would get in here, stop loss above, target your exit would be somewhere around there if this is your analysis time frame. Right now, if this is that's how you would get in. Correct. Now if we really pay it, so if that's the case, if price pulls back, you want to see if there's potential to sell. You can actually know, or you can actually use the 240 time frame just to see if there is potential sell involved, right? Like this. If price pulls back on the lower time frame, you know ahead of time that if you sell this area right here, there is a high chance or high probability of things turning around. This area that you're selling is on the daily time frame an area where the lower high may start happening. But here's the big but. Just because you know you're trading something from the higher time frame does not mean you want to get in here and hold and then wait for trade to travel all the way towards the downside, all the way like this. This is the problem I was talking about earlier. People would see this on the daily time frame and they would go down even to the 15 minute, get in on areas like this, and hope for trade to travel 1,000 pips, making 50R for one single trade. That's not gonna work, because you want to chunk the market. Again, the problem with going down too low, you're trying to get in at a microscopic level, hoping that things is just gonna go down in one straight line. If we go back to the daily time frame, things could easily, right? They could easily go down, boop, come up, and then drop, right? And on the daily time frame, that's nothing, right? That's nothing at all, right? It will still look like it's a huge drop, but it had a little push towards the upside before dropping, and that little up push could cause a lot of stop out for a lot of traders, right? So when you are able to identify something like this, like dollar Swiss on the higher time frame, and you're following along on the lower time frame, and you wanna look for a sell because you see this as a potential analysis, potential time frame to get in. You want to make sure you chunk the market. You don't want to get in and hold on for your dear life or hold on forever. So this trade right around here, right around there, your entry time frame would be on the 60 minute, right? Because we can see the separation here, and we are able to see this being the breach. We have multiple legs towards the upside, a pullback, try to move up, forming your first lower high. Price is holding back in this range, and that potentially could be your first entry. Now, the entry on this will look simply like this. You do not want to overstay your welcome. This right here is not something you want to hold on to. Why? because on the daily time frame, things are not ready yet, right? If I really just show you guys how this will look like. Okay, this right here, that would be the precise entry, precise exit for this dollar Swiss trade. Again, to show you guys again what this trade was, it's a breach towards the downside like that. We had a pullback coming in, and you want to get out right around there, right? We checked all of this, and we know this is not a problem because of everything we saw in the higher time frame, right? The whole reason why you don't want to go for this move all the way down here like that, making a 10-hour trade, is because on the daily time frame, this basically, daily time frame is the time frame that, the analysis, the entry is for the higher time frame. On this time frame alone, it could do multiple things. Where the hell is my profit marker? See, on the daily time frame, it could do multiple things, right? One little push towards the upside like that, that's gonna kill us before going down. So you will only target for the recent low if the daily time frame looks like it's set and ready to go. So in this case, if you guys are using daily as your analysis time frame and your weekly as your higher time frame and the 240 perhaps as your lower time frame, it will look something like this. Sorry, let me rephrase that. If you guys are using daily for your entry, yes, and the weekly as your higher time frame, right? It will look something like this. If the daily time frame is where you're getting in on, you would see this shooting star as potentially the first lower high that's forming, which is also a head and shoulder that's forming right here. If you guys are familiar with the head and shoulder pattern, like that, that could be an entry, and your exit will be right around here. Now this is the daily's time frame entry. Once the daily time frame has shown you an entry and it's getting ready to go, only after that you can go down to the lower time frame and try to hold on. Even if even when the daily time frame is ready, I still wouldn't really recommend to just hold on for dear life. I would still recommend chunking it on the lower time frame. But here's what I mean. So you see the daily time frame is getting ready, right? And it's going. Pull back a little bit, pull back a little bit, still pull back, all right? And then it's going, and then it reaches recent low. Still not at the recent low yet. Okay, then it reaches target right around here. And this, would be what's this? A 3-hour trade like that. Now notice, this is the daily time frame entry. If I'm on the lower time frame, your trade can be in a few spots, right? You're basically looking for this type of setup. Let me look for my drawing too. You're looking for this type of setup on the lower time frame, which is you're looking for a pullback sell. You know the sell is happening because the higher time frame is getting ready to go, right? And at which area looks like it's the clearest to you? Obviously, in this case, this area right here. Right? We have a move towards the upside, we have a push down, we have a pull back into that area, and that's where the sell is supposed to happen. Correct? So if you're getting in on the 240 time frame at this location right here, that's something where you can hold on to for a longer period of time, which would again look like this. Stop loss above, getting out at the recent low, right? Like that. And this would be another 2.5 hour trade, right? Again, you're chunking the trades as the higher time frame is getting ready. And that's how you use head is blocking, can't see my drawing. Cool. Faces. Okay. Right, can you see? Yeah, you guys see it now? Yeah, basically what I was trying to say is this was the area where the higher time frame is telling us things are going, and on a pullback, that's where you want to get in, right? We know the higher time frame got ready to sell right around here. Okay, this was the higher time frame daily entry that we were talking about. But again, you don't want to overstay your welcome. You don't want to go down to a lower time frame too soon and hold on for too long. If you're a lower time frame trader, let's say in this case, if you're a 240 trader, you wouldn't really care about the higher time frame entry, and you would just stick to the 240 time frame and look and see if you get your whole setup and your entry setup on the 240 time frame. So on the 240 time frame, you do see your pullback coming in, and if this is the time frame you're used to, just get in right around there, knowing that you're following the higher time frame's direction. That easily reduces any risk that you have that comes to this, when it comes to this trade, and easily increases your winning probability by using higher time frame, because now you're using higher time frame as an extra confirmation that tells you not only there's no risk involved, there is power from the higher time frame supporting this trade. So if I'm trading on the 240 time frame looking for a pullback buy, this buy has a lot of potential. Can you add to this trade? Can you hold on to this trade knowing that higher time frame is involved? It could potentially push a little bit further. Instead of 2.5R, could you hold on to 3R just to see how further you can push this? That's all the things you can do, again, with your multiple time frame analysis. Does that make sense, everyone? For the next coming webinar, I'm going to be covering everything to do with scalping. How do you scalp the markets? In this video, we talked about multiple time frame analysis, right? We haven't really gone down to the 5 minute or the 1 minute time frame, or not even talking about a 1 minute time frame, just the 5 minute time frame alone to really scalp the markets, getting in and out quick. I want to do a whole webinar around that, and that webinar is going to be coming up soon. So make sure to check out the link in the description below to register a seat. I want to see you guys there for the next webinar. Okay, that's gonna be a webinar that I'm gonna be talking with the team to really discuss on all this detail that I want to cover. So I want to see you guys there, right? So before all of you guys leave, just make sure to register there. And I hope this webinar was helpful. Time frame is something that I have been struggling with for a very, very long time. But again, I want you guys to really remember that time frame is nothing but something to support the main trades, to support the main setup. If you have a setup, you just use the higher time frame to look for risk management, lower time frame for your position entry. The main meat needs to come from your anchor time frame, the time frame, the middle time frame where you're really understanding where and what your setup is doing. Okay. If anything, hopefully in this 1 hour, I get to drill that in your mind. Okay, cool. All right, that's pretty much it, guys. That's the end of the webinar. Hope you guys enjoyed it. Share it with your friends. If you guys have any friends that's starting out with trading and they have any issues with time frame, again, make sure to like and subscribe if you guys haven't already. And I'll see you guys on the next one.